Hey, what's going on, everybody? It's Tuesday, May 17th. We had another nice move higher in the markets today. But here's my question for today and for the topic of this video. Is Joe Biden pulling a Bill Clinton? That's my question. And what do I mean by that? Well, you remember Bill Clinton running in his second term. You know, he had all these scandals, the Monica Lewinsky and everything like that. And his political advisor at the time, Dick Morris, said to Clinton, you know what we'll do? We'll do a triangulation. And what Morris meant by that is we will adopt a very important part of the Republican Party platform, which is, you know, fiscal responsibility. And we'll turn the deficit into a surplus. And that's exactly what they did. And in Clinton's second term, the federal budget deficit contracted and eventually went into a surplus. It killed the stock market. It threw the economy into a recession in 2001. And it was a pretty bad recession. And as a matter of fact, it resulted in a tremendous drain on non-government financial balances, and we really didn't turn that around until, believe it or not, the 2007, 2008, 2009 great financial crisis, when, you know, there was fiscal stimulus applied, and that you know, turned the situation around. But how does that apply to Biden? Well, we've already seen a very significant contraction in the budget deficit from the Trump years. Like, the deficit right now is down 1.3 trillion compared to where it was at this time last year. The deficit's about 555 billion right now, where it was like 1.8 trillion at this time last year. But you know, if I zoom down a little bit, you know, I've been talking in recent days about the problem with the stock market was that in April, the government ran a huge surplus because of tax filings, and that surplus carried over into this month, into May. And I've been saying that once the surplus flips back into deficit, it's going to be bullish for the stock market, and indeed, you know, we see this rally. So then you're asking, so Mike, what's the problem? The problem is, I've been telling you that yesterday we got a quarterly interest payment, or we're expecting a quarterly interest payment, which we got, and that, you know, I was anticipating would put the budget balance back into deficit by at least, you know, 40 billion, if not more. Well, it turns out yesterday we had the government had a massive spending day of 160 billion in a single day. Now, just to put that in perspective, the average daily spending right now is 30 billion. We had a 160 billion spending day yesterday, and that included a 42 billion 42 billion quarterly interest payment. So you would think, with a day like that, 160 billion in spending in one day, that should have thrown the budget balance into, you know, a large deficit that day, at least 100 billion, if not more. Unfortunately, the net addition to the deficit was a paltry 17 billion. We came out right now, as of yesterday, May 16th, the budget deficit, yes, it is, the federal budget balance is back in deficit, okay, for the first time since April 18th, but it is a deficit of 12.7 billion. That's very, very disappointing, okay? When you consider the fact that in a single day, the government spent 160 billion, and we saw a net change in the budget balance of 17 billion. We went basically from negative 4 billion to, it was negative 4.6 billion. I'm sorry, we went from a surplus of 4.6 billion to a deficit of 12.7 billion. So with 17 billion swing, that's it on a day when we saw 160 billion of spending. And again, just to put it in perspective, normally the average daily spending is 30 billion. I mean, it's just like incredible. So why do I say, is Joe Biden trying to pull a Bill Clinton? Well, maybe Joe Biden is very comfortable in the fact that, or maybe he is, championing a balanced budget and allowing this to happen. And I know a lot of this is automatic. A lot of spending is automatic. A lot of taxation is automatic. Most taxation, most spending is automatic unless there are new appropriation bills or new tax bills. But he's not pushing for any tax cuts. He's not pushing for any more stimulus. In fact, he wouldn't be able to get any more stimulus because, the boogeyman of inflation is out there. But here's where, again, it comes into play with what's happening with the stock market and what's happening with the economy. Now, I've been saying that once we get past this rough patch of April with tax filings and the first 2 weeks of May that still saw budget surpluses, everything is going to start to recover. And indeed, we saw the stock market now starting to recover. I said last Thursday that was probably the bottom of the sell-off. And it was, at least so far. But, this throws a lot of doubt on the sustainability of this rally. Now, I'm not saying the rally is not going to continue, but I have to say that we need to watch these budget numbers on a daily basis now. And if the deficit stalls out, like 12 billion, 14, 20 billion for the entire month, and we kind of sit there, I don't think that's going to be enough to sustain positive growth in the economy. And if to say it differently, we're probably going to get a recession. I mean, I really thought today we'd see more like a 40 billion deficit, and as a matter of fact, probably closer to like a 50 or 60 billion deficit. What happened yesterday? I mean, you had a 40 billion tax take, 40 billion tax haul yesterday. So, I mean, if you do the math on that, like the deficit now is, I said 12.7 billion, add 40 billion, that's 50, almost 53 billion is where the deficit should have been. As of yesterday, it's at 12.7 billion. I mean, that's just not enough. So, I'm not calling an end to the rally and the rebound right now, but I have to say that I got to keep track of these numbers on a daily basis. If we stall out, I mean, if it looks like we're gravitating towards a balanced budget, more or less, I mean, what is this percentage as a GDP? It's like 0.00 something. It's like literally nothing. If we gravitate towards a balanced budget, if we're starting to see months now where basically the budget balance is, at zero or maybe just a small, tiny deficit, that's not going to be enough to sustain positive economic growth. And in that situation, under those conditions, the stock market is going to stay weak, the economy is going to contract, and we're just going to have this real bear market. I mean, until now, I believe this whole thing was a correction based on inflation and interest rate fears, and also reflecting a slowdown in economic growth. I totally expected second quarter economic growth to be positive, around 2%, maybe slightly less than 2%, 1.8%. I mean, that would be fine. That would not equate, let's say, to a booming straight up stock market, but it would be supportive of stocks, and at the same time, I think it would alleviate some of the inflationary pressures. But I mean, we're on the precipice here. We're very close to the economy having back-to-back quarters of negative growth, which is, I guess, by definition, that's what they say a recession is. I mean, today was a disappointing day, or yesterday, I should say, was a disappointing day. The numbers were disappointing. A 160 billion spending day, and we end up with a paltry 12.7 billion deficit for the month of May so far. I mean, we definitely can grow that. We still have half the month left. a little less than half the month left. But wow, I don't know. So that's the question I'm posing. Because Biden, his advisors, and he said that the best way to reduce inflation is to reduce the deficit. So maybe that's their tactic. That might be his plan to score some political points. Biden has said that the Republicans have no plan to address inflation. Inflation is clearly the number one biggest concern for the Democrats when we come to the November elections. And he believes, and his advisors believe, that reducing the deficit is the way to tackle inflation. And it may very well be, but it will be, in a way that is perhaps even more painful than inflation itself, because it will result in a contracting economy, job loss. I mean, one of the things you have to, one of the things you have to admit right now is that the labor market is strong. The labor market is good. And as tough as the inflation situation is, at least people have jobs. At least people have employment. So if you're going to couple an inflation condition with falling employment and job loss, I mean, that's just like, that's doubling the pain. So yeah, it may end up in bringing inflation down, but at the cost of many, many people losing their jobs. So there you go, 160 billion day, and we have a measly 12.7 billion deficit. We flipped from a 4.6 billion surplus on Friday to a 12.7 billion deficit on Monday. Very, very meager in my estimation. Got to keep track of these numbers on a daily basis now. If the growth in the deficit stalls, then this is just a dead cat bounce in the stock market, unfortunately. But look, got to monitor the numbers, all right? I go by the data. I go by what's happening, and that will determine, where the market and where other risk assets go. Anyway, that's it for now, folks. See you tomorrow. Bye.